Hello, everybody. Happy holidays. Welcome back to PwC's X in Health. I'm Glenn Hunzinger, PwC's U.S. Health Industries Leader. And today I am joined by my good friend, Dan Farrell, who runs our health services deals practice here. Dan, thanks for coming on.
My pleasure, Glenn. Happy holidays to you.
Thanks. So read your thought leadership piece, loved hearing and seeing your thoughts that it's going to be a buoyant year for health services, a little bit of rebound. Can you tell me a little bit about that? What you think is going to happen? What do you think you're going to see? And sort of the why?
Yeah, sure. So 2026, as you read in the Outlook, I think it's the year that M&A comes back with real momentum. What we're seeing now that's different is that the assets coming to market are, quite simply, they're just better. They're cleaner on earnings, they have stronger cash flows, and they're tech-enabled. Just thinking about some of the recent deal conversations I've had, the deals that clients are excited about, they're not necessarily the biggest ones, right? Instead, they're the ones where earnings are clean, tech infrastructure is real, reimbursement exposure is low. That's basically what's bringing folks back to the table, especially on the PE side. So overall, 2026, we expect a lot more activity with a lot more quality assets in play. Your question around what's driving that, right? It's really two forces. The first is the market backdrop. It's just simply improving. We've got steadier interest rates. We've got reopening equity markets. We've got a more favorable exit environment. And when you take those forces alone, that's enough to unlock a lot of capital. But the second and the bigger driver is really just structural. Investors are looking at subsectors that are outperforming despite all the regulatory noise. They're looking at AI-enabled back office platforms. They're looking at tech-enabled care models. They're looking at certain specialties. I'm thinking like behavioral health, home-based care, some physician specialties that have access to drug distribution channels. Those are always hot. But going back to the AI point, one PE investor that I talked to showed me before and after numbers from a portfolio company that had embedded AI into workforce scheduling. And this wasn't theoretical, right? This was real. It was shaving millions off labor costs. And those are all real economic drivers. But if I had to sum it all up, I would say when assets are better and capital is available, deals are going to get done. And that's the environment we have right now. It's great.
Oh, it's tremendous to see. And as we spoke about, just in the idea of the future of health has to be more efficient, and technology as an enabler of it, even in the simplest things, I think is just tremendous. And it's great to see that private equity is investing and sort of making those transformational journeys. And I appreciate your insight, spending time with all the biggest sort of private equity out there and the insights. The other thing that was interesting in the report was the continued focus on carve-outs, which we're seeing across the industry holistically. If you're not the rightful owner of parts of businesses, you look to sort of unlock some of the value. And I think that's been a great way to invest and a great way to, the same point, transform. Can you talk a little bit about that and kind of what you're seeing and what you think there?
Yeah, well, we started seeing this trend around carve-outs. I would say it was early on for health services. It was early on in 2025. And whether it was health systems or large corporates, essentially what they were doing was shedding non-core assets. They were trimming down, focusing in on core capabilities. And some of those divestitures, right, like in the areas of laboratories, diagnostics, home health, I'm thinking long-term care, some revenue cycle business units, for example, which were parts of large health systems, they've turned into and are continuing to turn into large transformative deals. So it's a definite trend that we expect to see continue into 2026.
Yeah, that'll certainly help with some of the tailwinds there when we think about M&A and the investing. And then what I was really encouraged to see in here was the IPO market. And maybe that goes to your point on the quality of the assets that are coming up. But talk to me a little bit about that.
Yeah, well, I think what's driving that is sustainable cash flows, right? Now, just overall, macroeconomically, it's just a better environment for coming and going public. But I think particularly around certain health services deal assets, you see certain assets that have very strong, sustainable, long-term, predictable cash flow models. And that's a recipe for success in the IPO market. So we saw a few clients just over the last couple of months take their assets public in health services. And I would think in 2026, it's a viable exit alternative for a lot of our PE investors.
Yeah. And I think the interesting thing in your report was you're already seeing the momentum building. It's like the continuation of the momentum that we've seen throughout 2025 and accelerating. So just maybe hit on that point a little bit, because I think it really provides a foundation that, listen, it's going to be a strong year as we go into 2026.
Yeah, and 2025 was an interesting year, right? And I would call it a bit of a transition year. Deals were getting done, but buyers were definitely cautious. I mentioned before, there was the reimbursement headwinds, some political pressure. I spoke with one corporate development leader with one of my larger, it's a Fortune 100 client. In 2025, they had more deals that were on quote unquote definitive hold than they did that were actually in diligence. So that spoke a lot to the deal market in 2025. But those transition issues, basically, that just now in 2026, or as we pivot to 2026, it's basically just shifting the types of deals that are getting done, right? You have most buyers, PEs especially, they're avoiding the regulatory exposure, but they're moving more towards software, AI-enabled delivery platforms. Other buyers, for example, the large drug distribution companies, they're becoming incredibly influential when it comes to physician practice acquisitions. And of course, as you mentioned, you have the corporate carve-outs. So now here we sit at the end of 2025, the IPO window's cracking open again. You've got basically more access to capital. So 2026 is essentially the payoff period for a lot of that transition that we saw in 2025. You've got better assets, cleaner pricing, and more exit optionality. Again, that's a recipe for success when it comes to M&A activity.
Yeah, your point on the distributors really vertically integrating and going deep there, I think was an interesting one, and certainly a big trend you called out and expect to continue. That's pretty interesting when you think about the dynamics of the broader world of health, right? And we're seeing convergence, not just outside the industry, but across the sectors in the industry. It's more and more of that continuing to happen. So Dan, listen, super insightful. You know, everybody always likes to know, what didn't you put down on a page? What's the watch out? What's the thing that you say, this could be interesting to keep an eye on?
Yeah, that's a great question. I think personally and professionally, I think the most interesting thing to watch for in 2026 is going to be how quickly AI starts reshaping valuations and activity in health services. We're moving past the point at which AI is just seen as sort of a nice enhancement to a deal, or a complement to a portfolio company. Buyers are now looking to AI to drive real margin improvement and growth. It's not just a case study anymore. And if we see that, I think we're going to see in 2026 a very active M&A market in health services for the foreseeable future. It has a chance to really be transformative. And I think the expectations are only getting higher and higher when it comes to AI.
I love that. That's a tremendous watch out. And I think it's a good one because you just highlighted a couple examples where it's already existing. So if we can get from seeing it in certain examples to a scaled play, that would excite me, because I think our world of health could use that efficiency as we think about funding the next generation of innovation. So thank you for being here, Dan. Super insightful. Everybody, thanks for tuning in to PwC's Next in Health. For more on these topics and other insights across health industries, please subscribe to our podcast at pwc.com/US/Next in Health podcast. Until next time, this has been Next in Health.
This podcast is brought to you by PwC, all rights reserved. PwC refers to the U.S. member firm or one of its subsidiaries or affiliates, and may sometimes refer to the PwC network. Each member firm is a separate legal entity. Please see www.pwc.com/structure for further details. This podcast is for general information purposes only and should not be used as a substitute for consultation with professional advisors.